Jim Cramer says he likes Tesla and he believes that they're going to have a massive run soon, despite the coronavirus pandemic, which has seen factories shutter and sales plummet. Unlike many of its automaker peers, Tesla doesn't have a ton to complain about. Goldman Sachs recently resumed coverage of Tesla with a buy rating. It's believed by the company that Tesla is well positioned to benefit from long-term secular growth in EVs, and we expect the company's early mover advantage and technology cadence will allow Tesla to maintain good market share and gross margins. So what will cause Tesla's massive run? And is it happening soon? Keep watching to find out. Tesla officially opened its new factory in Germany this week, complete with Elon Musk dancing. It's Tesla's first European manufacturing plant, and it's estimated to boost Tesla's production capacity by 500,000 electric vehicles each year. Tesla's stock is up 3% and has gained more than 22% in the last week of March. The stock had fallen nearly 44% from its 52-week high of $1,243.49 prior to this latest surge. However, the fall in prices is evaporating. Tesla will be turning to its new European facility to relieve some of the pressure from its other factories in the United States and China, as well as global supply chain, transportation, and other factors. The company's ability to run its operations at full capacity is nevertheless hampered by production issues. It's worth noting that Tesla certainly isn't immune to the impact of the coronavirus shutdown. The automaker was forced to shut down its Fremont plant and has reportedly sought rent reductions from some of its landlords. The rapid world pandemic that is now affecting our country has led Tesla to make strategic decisions to ensure the company's long-term success and growth, Tesla wrote in a letter to landlords obtained by the Wall Street Journal. Tesla also had to cut some salaries by as much as 30% and let go of some workers as production in the US slowed down. Tesla's stock has increased more than 340% year over year. In addition to strong investor sentiment around Tesla's planned 5-for-1 stock split, the company has received a series of analyst upgrades that have helped to bolster the stock higher. Most recently, Wedbush Securities analyst Daniel Ives raised his one-year price target on the electric car and battery maker, citing that he sees an ongoing demand for Tesla cars in China. Ives noted that the Model 3 remains Tesla's linchpin of success, outlining the bull case for Tesla to Northwestern graduate students. Tesla Daily's Rob Maurer also noted the importance of the Model 3 and said that the reason to be bullish is very simple. Transportation in general is going towards electric vehicles and autonomous driving, Maurer said. Though Jim Cramer hasn't always been a fan, he hasn't been quiet about his enthusiasm for this stock in the past few years. However, he does wish the stock's recent run would slow down a bit more, though he will be the first to say, "You can't give stock speeding tickets." What do other experts think about this? Global equities research analyst Chip Chowdhury recently posted a rather bold prediction about the Tesla Cybertruck. According to the analyst, who is among Tesla's most ardent bulls, he expects the company to have two versions of the all-electric truck, one which matches the size of the vehicle's alpha prototypes, and another one about 15 to 20% smaller. The analyst added that the Cybertruck's smaller variant would likely be unveiled at a special virtual event around March 2022. Apart from being 15 to 20% smaller than the original Cybertruck, Chowdhury noted that the vehicle would have significant tweaks to the all-electric pickup truck's initial design. The longtime Tesla bull further predicted that Steel Dynamics, a company that is building a facility about 100 miles away from Gigafactory Texas, would be the sole supplier for the Cybertruck's steel exoskeleton. This would reportedly be true for both the full-sized variant of the all-electric pickup truck and the yet-to-be-announced smaller version. The global equities research analyst noted that he does not expect Tesla to mention the smaller Cybertruck during the upcoming Q4 and fiscal year 2021 earnings call, as the company would likely wait until March before the vehicle is announced. Ultimately, Chowdhury reiterated his overweight rating for Tesla stock, as well as his optimistic $1,500 per share price target on the company. Interestingly enough, CEO Elon Musk actually entertained the idea of releasing a smaller Cybertruck in the past. Following the Cybertruck's unveiling, a number of Tesla owners expressed their reservations about the vehicle's size, which would likely not fit in some compact American garages. Musk then briefly considered the idea of reducing the vehicle's width and height, but in later comments, the CEO stated that the production Cybertruck's size would be fairly identical to the prototype that was unveiled in November 2019. That being said, Musk did admit that producing a smaller Cybertruck would make sense in the long term, especially since the original size of the vehicle might be a bit too large for some territories. If the global equities research analysts' predictions end up being proven right, it would seem that Tesla is expecting some serious demand not only for an all-electric full-size truck, but also for one that is a bit more compact and potentially more affordable. Tesla is one of the market's best secular growth stories, according to CFRA analyst Garrett Nelson. Nelson told Yahoo Finance Live, "It's important to know, at a time where growth is really being hurt by inflationary impacts, Tesla is a story that's not immune to inflation. But the growth is really driven by company-specific factors. The growth for electric vehicles and also the startup of 2 new factories, one in Germany, which held up the ribbon cutting, and then one in Texas, where they have grand openings scheduled in 2 weeks from now," Nelson said. They're entering a really new growth phase with the startup of these 2 new factories that will increase their annual vehicle production capacity dramatically. And so that's what's really driving the earnings growth going forward, he added. Over time, they can really scale up with these larger factories. It really takes time. It's a several-month process to scale up to full capacity, he added. Nelson said Tesla's strategy is to do whatever it takes to boost production. They have a goal of increasing their annual auto sales from about 500,000 vehicles sold in 2020 to about 20 million by the year 2030. So that's 40 times growth that needs to happen. And so they're going to have to really accelerate their growth by building new factories. The Texas and Germany factories essentially doubled their number of operating factories from 2 to 4. And we believe they're looking at other factories around the world, he said. Building factories around the world is really going to help Tesla's growth in other markets and achieve economies of scale, which should help drive down costs. As Ukraine weathers a continued Russian invasion, sanctions are causing high oil prices, resulting in high gas costs at the pump for consumers. According to oilprice.com, the event has many wondering if high gas prices could further accelerate Tesla's rising stock prices and the overall adoption of electric vehicles. Brent crude oil hit a 14-year high of $139 per barrel earlier this month, compared to benchmark averages of just $70 in 2021 and only $43 in 2016. Analysts from Goldman Sachs and JP Morgan expect the company's oil barrels to increase to $135 and $185 respectively this year. The 14-year price hike came just as U.S. President Joe Biden began targeting the main artery of Russia's economy by imposing sanctions on the country's oil operations, adding that the move is not without cost at home. This cost is largely passed down to consumers at the pump, which could spark an even quicker move to non-petrol vehicles than previously thought. EV automaker Tesla could be uniquely positioned to benefit from the rise in prices, especially since the news comes on the heels of Tesla being given final approval to begin producing vehicles at its new Gigafactory in Berlin-Brandenburg and Giga Texas locations. With the aid of the new factories, Tesla is also shooting to double its annual production output to nearly 2 million cars this year. Analysts note that Tesla's Giga Berlin in Grünheide, Germany, is a significant strategic advantage for the automaker. Wedbush's Daniel Ives calls the company's momentum for deliveries extremely solid, despite continued semiconductor shortages and supply chain issues. In a note, Ives said he cannot stress the production importance of Giga Berlin to the overall success of Tesla's footprint in Europe and globally, reiterating his $1,400 price target on the company's stock alongside an $1,800 bull case price target. In addition to high prices at the gas pump potentially causing consumers to buy electric, Tesla's stock has already begun to see gains amidst the record oil prices. So what price target do you think Tesla stock will hit? Comment down below.